Hello and welcome to the Total Wealth Academy video podcast. My name is Steve Davis. I'm the CEO and lead consultant at Total Wealth Academy. My guest today is Andy Hemming of Capital Title, and we're going to talk about what real estate investors need to know about title and escrow. This is a touchy subject for me, Andy. Well, first off, Andy, welcome to the show. Thank you for coming on.
Thanks, Steve. I appreciate you having me.
Yeah, this is a pet peeve of mine because I saw people get burned. This was 20 years ago. There was a lot of owner financed property out there, and people were buying these owner financed deals without title insurance,
Yeah.
which was just every one of them got burned.
Yep.
One guy, within a couple of months of closing the deal, there was a $40,000 lien found against the property.
Yeah.
That if he'd have gotten the title insurance, he would have known about it and it would have been covered or solved before the deal closed. So if you would, explain exactly how title insurance protects the buyer.
Yeah. Thanks, Steve. I appreciate that question. And that story that you just shared is one of many out there that people don't learn until too late, the importance of involving a title company. So what the purpose of a title company is we do, let's call it a background check on the property and the people involved in the purchase of the property. And we're looking for liens. In the case you just mentioned, there was an unpaid lien. We look for judgments against the owners. We look for lawsuits affecting the property. We look for ownership issues, making sure the person who says they're selling the property actually has the right to sell the property. And it's a big deal, man. It's a lot of work, a ton of research. We have, teams of attorneys and examiners that this is their job. This is what they do. So when we get a contract on a piece of property, we do thorough research to uncover any issues that can affect the title of the property and ultimately affect the purchaser of the property. And Steve, you mentioned that situation. You mentioned the biggest problems we run into are those when we get a contract on a property where the seller bought it without a title policy. There's almost always issues. Because there's a reason that the deal happened without a title policy. The seller knew that they had some skeletons in the closet, right?
Right.
And so when we get those contracts and those deals and it did not close with the title company, there's almost always problems that we have to clean up. And, just a very quick history lesson. Title insurance has been around since the mid 1800s. It's been around a long time and it's evolved over time as laws have changed and our ability to research has changed. But prior to title insurance, it was definitely buyer beware. People would buy properties, not knowing anything about the property and just trusting what the person was telling them was true. Of course, a lot of problems came about as a result of that. Therefore, the title insurance industry was created.
Yeah, wasn't there was actually a time where it was very, very common for people to sell property that wasn't even theirs.
Yeah.
I think there was the old joke about somebody selling a bridge in New York
San
City.
Francisco Bridge or the Brooklyn Bridge. Yeah.
Yeah, the Brooklyn Bridge.
Yes, sir. Yeah.
Crazy.
Yeah.
So Capital Title helps investors from first timers to syndicators understand how title insurance and escrow protects their deals, their money, and their long-term strategy.
Yes, sir.
Well, first question I get, who usually pays for the title insurance?
I would say on the whole, the seller normally pays for it. With that said, it is negotiable. It's negotiable between the parties, and sometimes it's negotiated where the buyer pays for it, and sometimes it's split. But I would say, just in my experience across working in Texas for almost 30 years now in the industry, it's usually the seller that pays for it. But I don't want to indicate that they have to pay for it. So any sellers listening out there, just know, I'll say this: know that it is a negotiable item, but also know that most buyers come to the table expecting the seller is going to pay for it. So I'm also a real estate broker. I sold real estate for 20 years. And whenever I would sell properties, I would always counsel the seller. I'm like, look, I would tell them just that you don't have to pay for it, but just know the buyer is going to be expecting it. So it's better if we just plan on, working that into your closing costs. Yeah.
Yeah. It's kind of like without providing title insurance, it's kind of like the seller saying, "Yeah, it's my property, but I'm not going to prove it."
Yeah.
So
Yeah.
I think the seller should. The one other exception, though, is when you're buying from a wholesaler,
Hmm.
you may have to pay, as the
That's right.
buyer, may have to pay all the closing costs, including the title insurance. But
That's a
standard
that's a
deal,
very yeah.
it's generally the seller. Go ahead.
No, that's a good point that there are exceptions to that, not that rule, but there are exceptions, and you just brought up a good one. Depending on the nature of the deal, a wholesaler is trying to negotiate the best possible price, and the seller may say, "Well, that's fine, I'll sell it to you for that, but you're paying all the closing costs." So that is a good example where sometimes the buyer does have to pick up the cost of the title policy. Now's a good time to mention also, Steve, that title insurance premiums are regulated by the state of Texas, by the Texas Department of Insurance.
Mm,
It doesn't matter what title company you close at, whether it's Capital Title or any of the other ones out there, we all charge the same. It's regulated by the state. And that's not the
interesting.
case in every state. And when people move here from other areas, they're often surprised by that. It's not a negotiable figure. We charge what the state requires us to charge. And there's a formula that's used in order to calculate it. But all title companies charge the same. The only difference in the price is going to be in what's called the settlement fee or escrow fee. That title companies have different fees for that, or different charges for that, but it's going to usually be within 100 or $200. Not a big difference at all.
Gotcha.
Yeah. So what I like to say is that we don't sell title insurance. We sell service, because it's not like this is a product that we can compete on price or anything like that. I mean, we all charge the same. What we're selling is our service as a title company, the thoroughness of our research, the communication that we offer to the customers throughout the transaction, which is huge.
Well, quick question.
Yeah.
Can you gave me an example the other day about how having the right escrow officer can save a deal. Why
Yeah.
don't you review that and let people know? Because, they hand the paperwork over to the title company. They don't realize how much work goes between that and getting the title commitment.
Yeah, man, I was shocked when I went from being a real estate broker to an escrow officer. I had no idea, even after selling real estate for 20 years, I had no idea what the title company did until I was behind that desk and I was having to be involved in the title curative process and the escrow process. So there is a ton of work that goes on in the background. Okay, so the example I gave you the other day, and I think it's definitely worth mentioning, we had a buyer purchasing a large tract of land. It was in Liberty County, and with the plans on developing it. And when we got the title commitment back after we did our research, we produced what's called a title commitment. It showed that there's pipelines going all across the property, which is very common. Like that never happens around here, right? Very, very common in this part of the country. And it so happened that the pipelines and the subsequent pipeline easements were located in areas that were going to affect the buyer's intended development, right? So the escrow officer that closes, she's a commercial closer with Capital Title. She was able to be the point person with contacting the pipeline companies that held those easements and get them to remove them because they weren't even using the pipelines.
Wow.
I know this was big. This was big. Sometimes the pipelines are in use and that would not have been possible. But in this case, the pipelines had all been abandoned. They weren't even using them. And so the escrow officer, knowing this, knowing that, if you just make a couple phone calls, sometimes a lot of phone calls, these things can be cured. And she was able to cure it. It took a little while. The deal was delayed, but ultimately we got it closed.
Excellent.
Yes, sir.
Then let's talk about some key points. Uh,
Okay.
let's talk about some common investor mistakes.
Yeah.
I won't close any property without title insurance, whether I'm paying for it or whether the seller's paying for it. What are some of the key mistakes that investors make?
Sure. So I'm glad you said that. I wrote down a few extra notes here as I was thinking about it. Um, I would say that one of the mistakes is just assuming that everything is okay and not reviewing the title commitment. Okay. So as an investor, don't count on your realtor, don't count on anybody else. You look at that title commitment, because when the title commitment comes back, it's going to show what all has to be cured. It's going to show if there's probate issues, if one of the owners died. It's going to show if there's any liens that have to be cleared. And so review that title commitment when you get it in, so that you'll know as soon as possible if there's going to be any delays in the deal, so you can plan accordingly. Because sometimes investors are on tight time frames, right? Where they may be doing a 1031. They may have a loan lock that's going to be expiring. And there are things that pop up in the title commitment that can be fixed, but they're going to delay the deal. So I'd say that that's the first thing. Be an informed investor. Learn how to read that title commitment yourself. Learn how to communicate with the escrow officer as soon as possible to see if there's going to be any delays. That's one thing. Pretty simple thing to do. Another thing that we run into is a lot of investors assume that their LLC documents, their entity documents are all in order. Man, we have so many deals that are delayed because they've changed some of the corporate structure. They've changed some of their entity members, and their paperwork is not up to date. And that can take a while to get fixed. So whenever you are an investor and you're purchasing or selling through an entity, an LLC, a corporation partnership, have the title company review your documents so that they can tell you exactly who has to be signing, and you can have all your ducks in a row ahead of time. Closings get delayed because of that all the time. Sometimes they have to refile with the comptroller to get, to get current, things like that. So that's another fairly easy thing to do, but important, because you don't want to delay there. You want some more? I got more.
Yeah, I want the one about the creative structures. This one shocks me.
Okay, so the creative structures would be like if you've got somebody's purchasing a property and they're getting a hard money loan. Okay, here's one example. They're purchasing a property, and they're using a hard money loan, but they write up the contract as if it's cash. And then we don't find out, title company doesn't find out until the last, minute, sometimes just a few days before closing, that there's a lender involved. We got to stop everything, and the closing is almost definitely going to get delayed. So whenever you are purchasing a property, using a hard money lender, make sure to indicate that there's financing in there. If you're purchasing a property that is subject to, these subject to deals, right? Some title companies will close those, some will not, some will, and it just depends. So if you're doing for instance, with Capital Title, we can close subject twos, but not all the time. For instance, I had a call not long ago with a person who was wanting to purchase with a subject to, but the loan, it was an FHA loan. We won't do it. We can't do it. We are prohibited.
The due on sale.
Yeah, because of the due on sale clause. Thank you.
Yeah.
And so if it's an FHA, if the FHA is the underlying loan, we can't do a subject to. And so, investors, there's some great opportunities out there on, creative structures to be able to get into deals and whatnot. But just know that there could be these hurdles in the way. I'll tell you another one. I don't know if I mentioned this last time we talked, was that, did we talk about sheriff sales?
No.
Oh man, this is a big one. You've heard of sheriff sales, tax sales, right?
Absolutely.
Whenever you purchase a property on the courthouse steps, you can get good deals, no question. But you're going to get that property through a deed called a sheriff's deed. We will not automatically insure on a sheriff's deed, because that prior owner who got foreclosed on because of taxes, that's what a sheriff's sale is. It's basically county had to foreclose on it because they didn't pay their taxes. That prior owner has redemption rights. They've got the right to go back and reclaim that property, sometimes up to 4 years. So you may own the property through this sheriff's deed, but you ain't going to get title insurance for 4 years until that redemption period has elapsed for that prior owner. And then we will insure it. There are some exceptions. That time period can be shortened depending on whether or not the property was the prior owner's homestead, depending on if there's any improvements on the property. Too many variables to go into it, but just suffice it to say, when you buy property, courthouse steps and you get a sheriff's deed, don't plan on closing it anytime soon. And that can really affect your return, your ROI. Like if you're planning on flipping that property and
Yeah.
it ain't going to happen. And that surprises a lot of folks.
Yeah, that is interesting. Thanks for letting us know on that.
You bet.
Some of the other things we talked about, how early should an investor, this one's a no-brainer to me, but how early should an investor involve the title company?
Yeah. Before you even begin a purchase or a sale, you should have a relationship with the title company. I met with an agent, a real estate agent this morning who, this wasn't an investor, but it would be the same for an investor. And he's a new agent. He's about to get involved in the business. And I introduced him to one of our escrow officers, and I said, "This is your go-to person. This is your team member for all of your deals." And same thing goes for investors, because when you have a good title partner, you can pick up the phone and call them and say, "Hey, I'm looking at this property right here. Can you maybe do a lien search for me, kind of see what's going on with it? Hey, here's the type of financing I'm looking at getting for it. Is this deal going to work? Hey, here's my intended, here's my plans for the property. Here's my business plan. Is this reasonable?" Recently had an investor who was purchasing an apartment complex, and I got her connected with one of our commercial closers, and I believe they had a 60-day closing. It was a 90-day closing with a 30-day feasibility period. And they were in the middle of negotiations, and I had her talk to one of our commercial closers, told her all, and had them communicate to that commercial closer type of financing they were getting, everything they were doing, just to see if all their timelines made sense. And they did. I say all this just to mention that having a good title partner, they can help you even, during negotiations, making sure that your assumptions are on point with what you're intending to do with the property. So get them involved as early as possible. I'll mention 1031 exchanges, and we can dive into that as much as you want. But especially with a 1031 start, let that escrow officer know as soon as possible that you're going to be doing a 1031, because you can get into some trouble there.
Yeah, I get, the minute I sign an earnest money contract, I get it to the title company. So
Yep.
it's really as quick as possible.
Yes, sir.
What's the easiest way to avoid last minute delays?
Easiest way to avoid last minute delays is just that continual communication with the title company. And that, I got to tell you, depending on the title company, that can be easy or difficult. I work with Capital Title, and I know that we are very good at communicating. We're very good at explaining the title commitment. We're very good about identifying issues. We're very, very good about telling you, here's what you need to be doing right now. So the easiest way to avoid last minute delays is keeping those lines of communication open with your escrow officer and that escrow team, because they'll tell you what you need to be doing. It's when that line of communication gets broken, people aren't talking, that's when you get these last minute surprises. So I'd say communication is the best way to avoid that.
Yeah, for sure.
like most things, good communication solves a lot of ills.
Yes, no doubt. Let's talk about special situations, flips, rentals, and syndications.
Yeah. Okay. So with talking about maybe some of the differences in the way we approach that from a title perspective. With a flip, what you need to be aware of is there may be some impediments to you flipping in the time frame that you want. I already mentioned sheriff sales. That's a big one. Another one is if there's this 90-day rule for FHA and VA for government-backed loans that they don't, you can't flip the property until 90 days after you purchase it. And so that's just one thing that you need to be aware of as an investor. When you're doing that flip, there could be some of these impediments. From a title perspective, we don't really treat it any different. We do the research. All that is essentially the same. Where a big difference big difference in the service that we offer comes in is when you start getting into these bigger syndication deals. All right. Because now we've got multiple parties involved. Sometimes there's multiple properties involved that all may require their own separate title commitment. So as our service scales with the complexity of the deal. Had a deal not long ago where it was a refinance. By the way, we close refinances too. We're doing a lot of them right now. Interest rates, yay. So I had a deal where the company owned properties in Texas and Louisiana and Florida, and they were wrapping them all into one loan. Okay.
Wow.
Yeah. And so we had to engage our title partners in these other states and wrap it all into one title policy. It gets pretty complicated, but we can do it. Same thing goes with purchases. You may be purchasing a portfolio. These are for the big investors, a portfolio that crosses state boundaries. We can scale the level of our services to accommodate that. Not to mention, with these big syndication deals or these larger commercial deals, there's lots of parties involved. There's lots of money coming from different sources, lots of money going to different people, and we handle all that. We serve as basically as the transaction coordinator for those deals.
Excellent.
Yeah.
Okay. We mentioned this earlier, the 1031 exchanges.
Yes, sir.
How does the title company fit into a 1031 exchange? What are the biggest mistakes you see? What should somebody do if they're thinking about doing a 1031?
Perfect. So first of all, the biggest mistake that people make with a 1031 exchange is they sell the property before they engage the 1031, the qualified intermediary. After the fact, they go, I think I want to do a 1031. It's too late. You got to do it. You have to have those details worked out. You have to get engaged with the qualified intermediary and the title company as well, because we're the ones that coordinate it with the qualified intermediary, so that your funds never touch your hands. Okay. I just closed a 1031 yesterday. I still step in as escrow officer when needed, and had a guy, he sold some property in Pensacola. And it's kind of funny. He said, "I'm tired of saltwater fishing. I'm ready to go catch some catfish and crappie." And so he he bought a property up in Silsbee, Texas, just north of me right here. And so he sold that investment property there. He bought another property here that he's going to use part time. But anyway, we took his funds from the sale of his property there in Pensacola. We got them from the qualified intermediary. They sent them over to us, and now he applied them to the purchase of this property. So biggest mistake people make is they don't let the title company know ahead of time. All right. Because we actually own our own 1031 company, and it's very easy for us to get you partnered with them, talk you through it, explain everything to you. Because 1031 exchanges, as you know, and I know you've talked about it, are an awesome way to build wealth. I just talked with my CPA just this morning. We were talking about I'm looking at selling another property that I 1031'd into, and we were kind of talking about some of the details. Okay, I want to now scale it up, and all this time, all those capital gains just keep rolling up tax deferred. So I love 1031s, and the title company role in doing this is essentially being the point of communication between the customer and the 1031 exchange company. And we make sure that everything, that the funds go where they're supposed to go, and that all the documents are signed at closing. And there's not a lot that has to be signed. There's just like 2 or 3 documents that have to be done. Now, you could literally be 2 or 3 days from closing on one of your investment properties and go, "Oh man, I want to do a 1031." We can usually still pull it together. I mean, we can jump into action.
Wow, in just a couple of days?
Yeah, we've done it the day before. Because it's a matter of saying, all right, hold the phone, time out. Like if you're a seller and you're in this situation, now we don't like to do it the day before, but it can be done. You should be ahead of the game on that. But we can call the 1031 company, get them connected to the seller, let them get all the documents signed, and we can still pull it off even there at the last minute when necessary.
Okay. Let's talk about some quick hints. Um, what's one thing experienced investors always do that the newbies don't?
Okay, as it relates to title
And
or
or
just
escrow.
yeah, title or escrow. I was looking at I would say the experienced investors, first of all, they have a go-to title company and usually a go-to escrow team. And that's how you have to think of it. It's like they're part of your investment team. They're part of your strategy. And when you treat it like that, when you treat that escrow team as part of your investment team, you just get better service, man. I mean, you just
Yeah.
do. All of your documents are up to date with that escrow team. We understand how you operate. We understand the right people to talk. It just makes communication so much easier. I was looking at our book, some of our business here in the Beaumont office, and we've got one investor. He's actually out of Houston. He closes everything here through Beaumont. He has, and he was a wholesaler, and I think he's got about 20 closings with us this month. I mean, he's like, I'm not sure what he's doing, but point being, he deals with properties in San Antonio, Houston, Austin, Southeast Texas, but he's got one escrow officer right here in Beaumont, Texas, that handles everything for him. You know,
Wow.
and we can do that. So I would say that's the first thing that experienced investors do. They get one person as part of their team. And now's a good time to mention that we can close properties all over the state at any one office and do courtesy closings where we need to. So I'd say that's one of the first things that experienced investors do.
And I guess we ought to tell one title horror story,
Yeah.
just so people know how things can go awry or go bad without having your title insurance.
Well, I've got one where it doesn't. Okay, this isn't where they didn't have title insurance. This is where they didn't have a survey, but it is truly a title horror story. Let me share this one with you first, and we can talk about more too.
Okay.
So, without overcomplicating this, there was an investor who bought a property through foreclosure. A bank had put it up, foreclosure sale. He bought it from the bank. He paid cash for it, and it was a house, let's call it on 12 acres. And he bought it, he paid cash for it, and he chose not to get a survey. That was his choice. We didn't close it when he bought it, right? We always recommend getting a survey. He did not get a survey. Bought it from the bank, did not get a survey. He evicted the people that were living in the house, got them out of there, rehabilitated the house, put the property on the market, got a buyer for it. That's when we got the contract. We do the title search. We get the search back. We learned that he didn't buy the whole property. He only bought 10 acres of land that had been foreclosed on by the bank, in addition to the house and the other 2 acres. But the bank messed up. The only thing that they sold was the 10 acres that they foreclosed. They screwed up. He
So the
bought
house wasn't even on the 10 acres?
House wasn't even part of the deal. He paid
Wow.
cash for it. Had he gotten a survey, he would have seen, wait a second, this doesn't include the house. So literally, all he bought was that 10 acres. He never even bought the other one. He had to go back and pay off all those people he kicked out because they still owned the property. It ended up being an absolute nightmare for him.
That is horrible.
It is horrible, and that's all because he didn't get a survey. He saved, in this case, probably $1,500. So that was a really, really bad deal, and it had a pretty significant financial impact on him.
That's incredible.
Yeah.
It just goes back to there are certain things that are a pain in the butt. They cost money, but
Yeah.
if you don't do them, they can bite you in the ass bad.
They can. And, another another thing this just popped in my mind is because I'm thinking about it with surveys. Access is a big deal. Like whenever you buy a property and you may see a driveway with the property or some sort of like gravel road that's going to access, going back to access the property, never assume that you have that legal right to that access. It could be that that owner has owned that property forever and the neighbor has just been letting them use it, or there's some sort of handshake agreement. So, and it doesn't come up until after we go under contract that there's either no legal access to the property or that another legal access is going to need to be established. So this is just kind of a side note, especially if you see a gravel driveway of some kind, always make sure that that truly does belong with the property and it's not some sort of access easement that belongs to somebody else.
Yeah, I've actually seen that happen.
Yeah.
And the situation was the guy who was allowing him to cross his property was good friends with the previous owner.
Yep.
And he didn't get along with the new owner, so he cut off the access.
Yep. Man, that's funny how that happens, right?
Yeah.
Oh man, you give somebody a little bit of power, they're going to use it. They'll put a gate up. They will.
Yeah.
They will build a gate where you ain't get. Oh yeah, I've seen it before too.
They put it up. So in closing, you've got a little quip here about a clean title.
Yeah.
You have that memorized?
Clean title equals a clean exit.
That's it.
Yeah. So that's a good way to look at it. Clean title equals a clean exit. So because especially as an investor, when you're purchasing a property, you may intend to hold it for a long time, but eventually you're going to plan on selling it. You want to have clean title when you buy it so that you've got a good exit, just so that you're able to have a good smooth exit. Just like when you purchase a property, you want to get it at the right. You make your money when you buy the property, right? You got to get it for the right price. Same thing goes with title. Make sure you have a good clean title when you purchase that property, so that you don't have other issues on down the road. So we've got offices all over the state of Texas, over 120 offices. We can help you in any major market out there across the state.
How do they get a hold of you?
Okay. So the best way is two ways. My email is ahemmings, AHEMMINGS, @ctot.com. That stands for Capital Title of Texas. My cell phone, feel free to text me, 409-658-3695, 409-658-3695. Steve, next week I'm actually starting, it's not really a blog, but it's a series of emails that I'm going to send out that I'm calling it As the Title Turns. As the Title Turns. And it's I've got a couple of years worth of content of different things that went wrong as it relates to title and what you as an investor should know about. So if anybody wants to get on my email list, I'm going to start sending these out. It's something I'm really excited about. I'm going to launch it next week. Feel free to email me, ahemmings@ctot.com. It's little short stories, little nice nuggets with good learning points in there.
Well, that is awesome. Thanks for making that offer to everybody.
You betcha.
All right, Andy, I sure appreciate it. Thank you so much for coming on.
Thanks, Steve. Have a good day. Happy Thanksgiving.
All right, you too.
All right.
And everybody, thank you for listening. This again has been the Total Wealth Academy video podcast. You may be familiar with our radio podcast. I think there's 800 episodes of that. This just happens to be the third episode of the video podcast. So thank you for watching. Have a great rest of your day.
3's my lucky number. I love it.
Excellent.
All right. Thanks, Steve.
Take care, everybody.
All right.